Hello everyone, it's Arnaud Delapierre. Today, I welcome you to this channel to share concrete tips on rental investment. Many see real estate as a solid pillar for generating income, but they do not always know where to start or how to engage without excessive risk. In this video, I suggest exploring different angles from choosing the property to rental management, as well as the art of effectively financing your project. My goal is to provide you with content that will help you face challenges and move forward calmly. Setting your budget will be the first step. From this perspective, let's start by clarifying the issue of budget and profitability. Even before looking for an apartment or a house, it's important to define your own financial capabilities, amount of contribution, accepted level of debt, and return objective. By knowing one's limits, we greatly reduce approximations and avoid poor choices. If the primary issue remains cash flow stability, careful preparation often helps avoid pitfalls. 2. At this stage, it is also good to learn about taxation, as certain measures offer advantages and can make a project much more accessible than one might initially imagine. Let's talk a little about the location. The location plays a crucial role in the success of a rental investment. A location close to amenities, public transportation, and useful activities for daily life generates strong appeal. In this way, one ensures a strong rental demand and potential long-term appreciation. By studying the local real estate market, one can discover emerging or rapidly changing neighborhoods. The idea is to find an area with growth potential over the targeted period without rushing into any opportunity. This analysis must always precede the purchase, never the reverse. For those who also like to follow financial markets and crypto, I highly recommend the Notrade app, available on iOS and Android. It is completely free and offers very accurate trading signals. Its interface is designed to simplify life of those who want to closely monitor their investment and receive market alerts. While taking advantage of personalized alerts, it will help grow your portfolio. It is well suited for both novices and experts. That's the whole point. If you are looking for notifications to stay informed and make informed decisions, Notrade can truly make your investor life easier. Let's get back to our main topic to fund our project. To finalize a purchase, the question of financing inevitably arises. Choosing the right lender and negotiating credit terms can make a huge difference in the final profitability. Some opt for a substantial down payment to reduce their monthly payments, while others prefer to limit the down payment and maintain a safety savings. In any case, it is advisable to compare rates carefully, estimate the total cost of the credit, and consider the most suitable loan duration. A carefully calculated financing plan can really ease financial pressure in the long term. New or old? It's always the big question. The rental investment strategy also involves choosing between a new or old property. New ones are attractive due to reduced maintenance costs and guarantees. Supposedly, the old can offer charm and a purchase price that is sometimes much more profitable or affordable. However, renovating an old home can quickly strain the budget if a fund dedicated to these works has not been planned. To position oneself intelligently, it is better to analyze the total cost, including charges, taxes, and possible renovations. It's also important to look into available public aids like certain subsidies or local tax reduction schemes that can ease the financial burden. Special attention must be given to or focused on the gross profitability versus the profitability. Net. The first is calculated simply by dividing the annual rent by the purchase price. Even if this figure gives a quick overview, it remains completely incomplete. Net profitability, on the other hand, includes all expenses: interest on loans, co-ownership insurance fees, maintenance, and possibly property management by an agency. This second indicator reflects more accurately what you will actually receive each month. By taking these elements into account, you can anticipate a more realistic margin and avoid overly optimistic miscalculations. There are different approaches in property rental. You can offer your property as unfurnished, where the tenant provides their own furniture, or opt for furnished rental, which requires equipping the property with the necessary furniture. Each of these options presents advantages in terms of lease flexibility and taxation. On the other hand, some prefer seasonal rentals, which mean slightly higher rents but require more management. The important thing is to choose the option that matches both your management capabilities and the rental demand in the targeted area. Rental investment involves uncertainties that should not be overlooked. The risk of vacancy, unpaid rent, or regular maintenance can represent unforeseen additional costs. To limit the impact of these risks, it is often recommended to subscribe to insurance, for example, for unpaid rents, which protects your income in case of problems. Also, make sure to build up a cash reserve that can absorb urgent expenses, like replacing a boiler or structural repairs that are not covered by the condominium. Good risk management leads to greater peace of mind in daily life and long-term asset protection. Property management also represents a significant aspect of investment. Some owners prefer to handle visits, contracts, collections, etc. themselves, while others delegate all this to an agency. Specialized. Each individual's schedule and the property's location often influence this choice. Managing alone allows saving on agency fees, but takes more time and requires some knowledge in rental law and accounting. Even though today, ChatGPT might be able to help you. Help. Delegating to a professional offers a more complete service by handling administrative procedures and potential disputes. Each person must weigh the pros and cons. The relationship with the tenant should not be neglected. A satisfied tenant will tend to stay longer and take care of the property, which reduces turnover and costs related to refurbishment. To maintain this relationship, one must be responsive to justified requests and establish a climate of trust. Prevent problems through clear communication, especially concerning the rules of use and the regulations of co-ownership enhances transparency and limits unpleasant surprises. Constructive dialogue and regular follow-up can improve the profitability of your investment in the long term. Over time, some investors decide to acquire multiple properties to grow their rental portfolio. However, multiplying acquisitions requires solid organization and precise analysis of each operation. Accumulating credit can become a trap if repayments and cash flow have not been planned. Each new project must be evaluated separately to ensure that profitability remains satisfactory and that the overall expenses do not suffocate the cash flow. Moreover, sometimes it can be wise to resell a less performing asset to free up funds for a more attractive and better suited purchase. Let's talk a little about taxes now. Taxes play an important role when one is interested in property rental. It goes hand in hand. Between unfurnished rental and furnished rental, the tax systems differ and can impact, notably, the profitability. Certain deductions are possible, such as loan interest, maintenance expenses, or even management fees. There are, furthermore, specific schemes, like the micro real estate, the simplified regime, which simplifies the declaration of rental income. Choosing the tax framework suited to one's personal situation allows for efficient management of expenses and maintaining a balance between profitability and legal obligation. Even with good preparation, certain mistakes can directly impact the yield. Among them is a rushed purchase without market research, an underestimation of the renovation budget or rent that's too high, driving tenants away. Ignoring the importance of on-site management, whether due to lack of transport, lack of time or motivation, can also cause these tensions. One should also not underestimate the administrative paperwork or the current regulations on energy diagnostics and safety. Taking the time to scrutinize each step significantly reduces the risk of failure on this project. To conclude, I hope this overview has provided you with solid leads to consider your next rental project with peace of mind. The goal is not to earn a lot right away, but rather to gradually build a reliable portfolio that generates regular income. Every choice, from financing to management, will have an impact on your results. If you wish to support this channel and enjoy more content on investment and finance in general, feel free to subscribe and like the video. I warmly thank you for your attention and see you soon for the next episode.